Welcome to the Profitable Home Services Podcast, a podcast where we are here to find all the profitable leaks in your company, as well as offer you some tax savings along the way. My guest today is Edward Lyon. Ed and I go back a long ways. He was one of the first ones that helped me convert my company from being just a traditional accounting firm to being in that top 20% of firms out there where we're working with clients, saving them taxes, saving them profit, and giving them a much higher level of service. So let me tell you a little bit about Ed. Ed is an author, speaker, consultant, specializing in tax reduction strategies and planning for small businesses. He is called the funniest tax guy in America by CNN. He's a leading authority on tax reduction and has dedicated his life to helping business owners and tax professionals beat the IRS morally and ethically. And I think that's a real important piece to really talk about is how tax planning is moral and ethical, and the IRS expects us to do it. So welcome, Ed. Welcome to the show.
Thanks so much. I'm excited to be here because I have worked with over 3,000 tax professionals in my career, and you are cream of the crop. Diane, you are by any measure top 1%. When we met, you were putting numbers in boxes. Now you're guiding business owners towards more profitable businesses, more tax efficient businesses, and really better lives. Because that's the ultimate point of running a business, is to take control of your finances and your place in the economy. So a lot of people talk about wanting to do that for their clients. A lot of people learn how to talk the talk, but you are walking the walk, and you have always been one of my favorites. So it's a real honor for me to be here with you.
Well, thank you. And I'm happy to report that I am over $7 million in tax savings for our clients, and over about $1.5 million in that we can track in profit savings in the last year and a half. So that's exciting when you
that is exciting. That's real money. It's not just numbers in boxes. And a lot of people think that taxes are about numbers in boxes. They think that accountants are about numbers. And at a superficial level, they are. But as you know, if you just stop with the numbers, you really miss a whole universe of opportunities to be a counselor and an advisor.
And one of the most rewarding things about becoming that counselor and advisor is watching the difference that it makes in my clients' lives, watching them be able to unplug from their business and take that vacation, because now they have the money to do it, as well as they have got the systems and processes in place so that their team can run without them. But previously, they were struggling to find the money to pay their income tax. And now they've got the money, and they're able to pay their tax and take that vacation, or take those extra days off throughout whatever time period throughout the year and spend more time with their families and those types of things, which is what we really want for all of our service business clients, is a better quality of life.
A better quality of life and confidence in that quality of life. So what does confidence come down to? And this is something that's intrigued me in the 18 years that I've been working with CPAs, enrolled agents, and their clients. Confidence is the story that you tell yourself about yourself. And confidence is the understanding that no matter what happens, you're going to be okay. So the typical tax professional does a great job putting numbers in boxes, tells the client how much they owe. The difference when you start going after those profit leaks, the difference when you start going after the tax planning, is to provide a place of security and confidence so that a contractor can understand, hey, if I don't get this job, it's going to be okay. Or if the client stops paying halfway through, it's going to be okay. If I hear no in a business conversation, it's going to be okay. And when you do that, your blood pressure goes down, your weight goes down, your skin clears back. Guys, if you're 60 years old and you're balding, your hair starts to grow back because of this confidence that you get from knowing that your business is in good hands, and they're your hands, and you're going to be okay.
And I think that all goes back to having that plan, a plan of
Yes,
some sort that you've put in place, because we all know that if we fail to plan,
right.
we actually fail. We will be planning to fail if we don't have a
Right.
plan in
It's
place.
it's a cliche, and in this case, it's a cliche because it's absolutely true.
Mhm. So when we come together and we're able to put in place some tax saving strategies and some profit saving strategies, they may not look like a lot at the very beginning, because maybe we only saved them 5 or 10,000 in one area. But when you start compounding that over many
Mhm.
different areas and facets in their business, that number starts growing pretty quickly. And within a short period of time, they start reaping those rewards.
Right. So your quote was, if you fail to plan, you plan to fail. My quote is from Albert Einstein, and it's that the most powerful force in the universe is compound interest. And so, particularly your approach. So, I work with a lot of tax professionals, and I talk about why tax planning is so important, because it's the key to your financial defense. So, you're a business owner listening to this podcast. There are two ways that you can put money in your pocket: financial offense, which is making more, and financial defense, which is spending less, keeping more. Most tax professionals who really go into the planning, they're focusing on the financial defense. Where your business is different, Diane, where I see your business being different, is you're really helping with the financial offense as well as with the financial defense. And when you put both of those to work, you really compound a lot faster. And the effects may not look apparent up front, but 6 months or a year down the road, when you start to see the flywheel moving, you'll see the power of it. And 3 years, 5 years down the road, it's apparent because you're taking more time and you're going on vacation more, you're spending more time with your family. When your son graduates from college, you're spending 4 days there instead of 2 days there. In little ways, it all starts to compound. And then when it comes time to retire and sell your business, you're selling your business for $1 million more than you would have sold it before. And oh, by the way, we have ways that we can help you keep those millions. So it's a compounding effect that starts small and really builds very, very powerfully from not that many different moving parts.
I still remember one of my very first tax plans that I did. We were able to save him $30,000 a year in tax. Doesn't sound like much, nothing that I would get too excited about nowadays.
Mhm.
But over time, that 30,000 consistently every year, he bought a commercial building, ended up paying for it in about 3 to 4 years. He
Wow.
has since sold his business, and
Mhm.
now it's a retirement asset that's being rented out, and he has income coming in every month.
Mhm.
And all because of a simple strategy that we did about 10, 12 years ago,
Okay.
and has
So
changed his life.
it's only going to compound more for him over the
Mhm.
remainder of his lifetime. And imagine being 30 or 40 years old now, just getting started in your business and being able to do this.
Mhm.
It's not just numbers and boxes. It can be truly life changing.
Right. And this particular client had a short runway compared to somebody who's 30 or 40.
Right. And that's
So,
with $30,000 a year.
mhm.
I've seen clients who, I mean, I routinely work with clients where I can save them, hundreds of thousands of dollars a year. I'm working now that I've been doing this long enough. I'm working now with clients where we're looking at saving millions of dollars in federal income tax in a single year, and using structures that will protect the future growth of that income from estate taxes as well.
So, Ed, question for you. As I talk to other accountants, they all say that they do tax planning. But if you really sat back and looked at it, they're not getting that kind of a result. What's the difference between the kind of tax planning you do and what other more traditional accountants call tax planning?
Well, they're not doing tax planning at all. What they're doing is projections. So a typical accountant working with a business owner will sit down in March, say, and prepare an S corporation return and a personal return for the year previous. They will then prepare 4 quarterly estimates for the business owner to send to the IRS in April, June, September, and January. Towards the end of the year, they'll continue to keep the books. Towards the end of the year, they'll sit down with that client, maybe in November, and they'll say, okay, let's see how close you are to those estimates. So we're going to do a projection. Give us your pro forma, give us your books. We'll do a pro forma and estimate how much you're going to gross and net for the year. And then we'll see if that number agrees with the estimate, so that for the January estimate, we can either send the IRS more money than you were planning or send the IRS less money than you were planning. That's not planning. That is a projection. We're projecting out their tax liability. Then if the business owner says, holy headbutt, I got to send the IRS an extra $30,000 that I wasn't planning, what can I do? And the accountant will typically come up with short-term solutions. And that's going to be 2 things. And those of you who are working with other accountants who are listening to this podcast, you've heard both of those suggestions. 1, buy more equipment. And we call it yellow fever because Caterpillar equipment is painted yellow. Now, John Deere fans, same thing works with the green that John Deere paints their equipment. So buy more equipment. We can write it off. And if you buy the equipment and you put some money down and you finance it over 3 years, but you can use expensing to write off the equipment this year. That's great if buying more equipment makes sense for your business. But traditional accountants who are just looking at the tax returns and aren't doing the sort of business planning that you do with your clients may be recommending the clients buy more equipment than they need or replace equipment sooner than they need. They're letting the tax tail wag the business dog. The other recommendation they will make, especially after January 1st, when the client sees the size of their tax bill, might be to recommend an employer-sponsored qualified retirement plan. And that can make sense for lots of business owners, but for lots of business owners, it doesn't make sense either. You look at some immediate tax savings now, but you've got to understand that when you put money into an IRA or a qualified plan, you're not eliminating tax. You're simply deferring it. You're kicking the can down the road until when you pull that money out. So the question becomes, will I save more money by putting it in the plan now than I pay when I take it out of the plan? And where a lot of accountants fall down is they don't provide accurate numbers for that calculation. So if you're a business owner and you're the only one you have to put money away for, maybe that works if you're going to be in a lower tax bracket in retirement. Of course, we don't know what the tax brackets are going to be when you're retired. And with a $31.4 trillion federal debt, taxes are probably going to go up, not down. The other calculation a business owner needs to understand is I may be in the 35% tax bracket now. So if I put $20,000 into a 401k, I'm saving 35%. But when you own the business, you don't get an employer match on your 401k. You pay that employer match on your 401k. So if you're putting $20,000 in for yourself, but you have to put $10,000 in for your employees, you're not getting a 35% tax savings now. And almost certainly when you pull the money out down the road, you're going to be paying more tax on it. So those are the 2 recommendations that most accountants are familiar with. Buy more equipment and set up a qualified retirement plan. But they don't look at fundamental questions like what sort of entity should you have? Should you have the entity that you currently have, or should you have multiple entities? Should you have a C Corp and an S Corp and an LLC to own the equipment or to own the real estate where you operate your business? What kind of employee benefit plan should you have? How can you integrate your children into the business? Should you be taking advantage of tax credits like the ERTC or the R&D credit or the WOTC? A lot of accountants simply aren't familiar with those areas. Should you have a qualified retirement plan or not? Should you look at charitable giving options that lets you keep your strings on the money. Maybe there's a more efficient way to make your charitable gifts. Should you be looking at special purpose business vehicles like captive insurance or IC discs or other things that are too terrifying for most accountants to even think about? But that's the world that you and I live in. That's the world where we bring clients strategies that they don't get from their local mom and pop accountant. And you understand that as well as anyone, because when we first met over 10 years ago, you were the local mom and pop accountant.
I was.
And you have learned, you have grown in a way that most accountants don't, because they don't have the time, because they're doing hundreds of tax returns in a year, or they don't have the training, or they don't have the inclination. So I'm gonna give a little secret to the listeners here. You're here because you have heard of Diane. It's not just because she is a great accountant. It's because she is an entrepreneur. She's a business owner in a way that most accountants aren't. Most accountants are technicians who somehow found their way owning their own practice, in the way that a lot of, electrical contractors are technicians that own a small business. But if you want to become a true entrepreneur and a business owner, if you want to build a business that you can leave for a month in the summer and continue to run with systems and processes, you need to have that mindset. Most accountants just don't have that mindset. And I think that really is the key. I'm not an accountant myself. I am an attorney by training. And the difference is accountants are taught to follow the rules. It's really not about numbers. It's the rules. So the debits have to match the credits. The balance sheets have to balance. Any competent sixth grader can do the arithmetic. Accountants are rule followers. Attorneys, we're not just taught to follow the rules. We're taught to bend the rules and stretch the rules and poke a finger through the rules. Now, the planning I do, it is all legal, moral, and ethical. It is legal. When we sit down and we tell you how to set up a medical expense reimbursement plan and write your daughter's braces off as a business expense, we can point to the exact section in the Internal Revenue Code and Treasury regulations and the tax court decision that says, yes, you can do this. It's all legal. It's not red flags. It's not aggressive. Now, there are some areas where planners will work in gray areas, and ethical planners will divulge those gray areas to their clients and disclose all of the potential downsides. Ultimately, the client makes a decision. So I'm going to take a deep breath. That was a very long-winded answer to a simple question. Why don't most accountants do planning? But they don't.
But that was a very important question to get that distinction out there. Because I
Right.
hear people all the time, well, my accountant does tax planning for me. And in reality, they don't. They're
No.
just preparing a projection. And
No,
then,
a very wise gentleman named Sandy Botkin once said, the 7 most expensive words in the English language are, my accountant takes care of my taxes.
very true. Yes. Yes. So what have you seen that maybe is a new trend in the tax planning world that maybe our
Well-
listeners haven't heard about?
So I see more accountants are actually turning to tax planning
Okay.
because of technology, which is eating away at the margins of their traditional tax prep business. So artificial intelligence isn't at a point yet where they can sit down with a client and say, here are the 3 things you should do first, and here are the 3 things you should do next, and here are the 3 things that you should do after that. So increasing technological capabilities, tech companies like Intuit, that's not going to make tax preparation go away.
No.
But it's going to reduce the demand for simple tax preparation services. And that means that the accounting industry as a whole will start to see business shrink. They're going to need to find new ways to fill their calendars with work to do. So tax planning and financial planning services, I'm seeing a lot more accountants move into those areas. I'm seeing a whole lot of attention now on tax credits. So we all lost business. Most of us lost business during COVID. Most home service businesses lost business, even if they grew during the years of the pandemic. Many of them grew during the pandemic, but they didn't grow as fast as they would have grown had there been no pandemic. So Congress passed something called the Employer Retention Tax Credit, and many of your listeners have heard of it. Many have already filed claims for the ERTC. Those who haven't should be doing it pretty quickly, because the money is going to run out someday. And guys listening to the podcast, if you have employees and you haven't filed for the ERTC, pick up the phone and call Diane and do that. And do that sooner rather than later. But that's drawing attention to all sorts of areas where accountants had not been working. And the one that I'm seeing most prevalent is the research and development credit. A lot of business activities are research and development, even if you don't think of them as research and development. You don't have to be sitting in a basement tinkering with inventions looking for a patent. Anything that you do to create a business process, all of the labor that is attributable, all of the employment and the expenses that are attributable to creating new business processes is likely to be eligible for the research and development credit. And development credits are even better than a deduction.
They are.
So if I spend $100,000 on a new truck, and that's not much to spend on a truck. You can probably spend that on an F-150 if you load it up with enough options. If I spend $100,000 on a truck and I'm in the 35% tax bracket, I may be able to deduct that $100,000. That doesn't mean Uncle Sam is paying the $100,000 for the truck. It means I won't pay $35,000 worth of tax on the truck. So I've spent $100,000 to save $35,000. I now have a truck. And by the way, since I've deducted that $100,000, when I sell that truck a few years down the road for $40,000, I'm going to have to pay tax on the $40,000 I get when I sell it. But something like an ERTC, even more so a research and development credit, when the IRS sends you $50,000 in R&D credits, that means you get $50,000 to put in your business bank account. You can use that to fill those profit leaks. You can use that to expand. You can use that for whatever you want to use it for.
We do love credits versus deductions.
Yeah, and I'm seeing a lot more accountants realize just how many credits are out there. Solar credits, work opportunity tax credits. If you are bold enough to give an ex-convict a second chance because you want to believe that people are good, the IRS will reward you for it.
Tell me a little bit about some of your future plans moving forward. Because I know you've been busily training lots and lots of accountants. You've developed software. Where's Ed going next?
Well, I'm going to continue doing all of that. I'm continuing to work with the group that I've worked with for the last 18 years, where we focus on turning accountants into tax planners and turning tax planners into family office directors. I'm working with a new group where I'm doing similar training for insurance agents, so that they have something more to offer their clients than simply financial projects. I have some publishing projects that I'm involved with, and after writing 8 books in the tax and marketing field, I've started a novel. So I'm 58 years old, and I'm looking to take advantage of the same lifestyle advantages in my own business as you and I have been working for the last decade to give to our business owner clients. I have a couple of daughters who are going to come to work for me in my business. So they are, I have a daughter who's an actor and a daughter who is a writer, just out of college. And needless to say, acting and writing when you're just out of college don't pay a lot, especially when the Writers Guild is on strike. So I'm going to bring them into my business. I've been helping them financially get on their feet post-college. Now I'll be able to do it with tax-deductible dollars that are taxed at their rate rather than my rate. So even in building this business, I'm bringing in some of the tax planning that is so important to make it more powerful for the family.
It's always nice when we can take the tools of the trade and use them for ourselves.
Absolutely. We become our own best advocates. We become our own best evangelicals for the work that we're doing. I like training. I like doing podcasts. I like getting up and standing up in front of an audience. I was in Phoenix last week. I was in Dallas the week before. I'm teaching a 5-day class in the Bahamas in August. Let me tell you, after teaching classes in airport Marriotts, at a Chicago airport or a Dallas airport or a Charlotte airport, I'm excited to be teaching in the Bahamas, and I'll be teaching the classes in the morning and I'll be scuba diving in the afternoon.
Sounds like a really tough week coming up there.
It's going to be a whole lot of fun. When I get home, I'll sleep well for a couple of days.
Yes.
But shouldn't life be an adventure?
It
I
should.
mean, home service business owners, the most successful ones, they take skills. They take technical skills in repairing people's houses and giving their customers better lives. But they spin that into a business to give themselves better lives, and it's flexible. What do you want to do with your life? Do you want to spend time with your kids as they're growing older? You can do that. Do you want to learn how to fly an airplane or ride a motorcycle or go scuba diving or ride horseback through Yellowstone for a week? You can do all of that. You can see the world. You can spend quality time with the people who are around you. And I think that's the meaning and fulfillment that most of us are looking to get out of our lives. If you're trapped in a business that you don't control because profits are leaking out and taxes are leaking out and your colleagues are leaving or employees aren't staying with you and customers are leaking, if you have all of those problems, you don't have control over your life, and you're probably heavier than you want to be, and your blood pressure is higher than you want to be, and your cholesterol is higher than you want to be. So when you fix these financial problems, it doesn't just put you in better financial shape. It puts you in better physical shape. It puts you in better social shape. It puts you in better spiritual shape. So I really do believe that we're changing lives. My favorite client testimonial ever came from a client when I realized, and I told her that in 4 years of working with her, I had saved her enough money to pay for her daughter's wedding. That's the kind of transformation that we're looking to make.
Yeah.
Let the ordinary accountants sit in cubicles and put numbers in boxes. If that's what makes them happy, more power to them. But Diane, you and I want more out of our lives. Your business owner clients should be able to get more out of their lives too.
That's right. And I think we both have the goal of really making a difference in the business world, one business at a time, just getting in and helping them and giving us the business of our dreams. So my psychological driver is being the smart, funny guy at the front of the room. And now that the pandemic is gone, the pandemic was tough on extroverts, tough on people who speak for a living. Zoom just isn't the same thing. And being able to get out in front of audiences helps me. In your case, you've been able to work with some of the most successful business owners in America. And I would bet you have clients in 30 or 40 states. I do.
Geography is not a limitation. It doesn't matter if they're in Idaho or Hawaii or Alaska or Florida, and you've got clients in all of those places. And the amount that you have learned about business and business owners and the world and people. I mean, you've written how many books?
15?
15. I can't even count now how many
or
books.
16 maybe.
Right. You're at the point where you don't even remember how many books you have written. You could write a book of business and success lessons that you have learned from the clients that you have worked with. And that would be a book worth reading.
It would. Yes. I got some very good stories out there. Worked with some amazing people over the years. I still remember the conversation probably 9 or 10 years ago when I first came to one of your events, I was this little timid, quiet, introverted accountant from
You
little
were,
small town America in northern Idaho.
yep, you
And
were
I
a
said,
mousy accountant from the
"Uh,
mountains of Idaho.
this will never work because I live in too small of a town. And you told me go fish in a bigger pond."
Yeah,
And I
yeah.
went, "What?" And
Yeah.
now we're doing it. We are nation, coast to coast. We've got clients all over the US.
Yeah. You're not
And
just fishing in a pond, you're
yep,
competing in the tournaments and you're reeling in the prize winning fish. And it's not because you have an Ivy League education.
mm,
None of your clients know. I don't know where you were educated, but it's never mattered.
nope, doesn't matter.
It's never mattered. And it's what you've done and what you've accomplished for yourself. Very few accountants get to the point where people choose to do business with them because of who they are rather than just what they do.
Or
And
where they're
you're at
located.
that point. You're at that point.
Right. Yeah. So I'm going to say thank you for pushing me to fish in a bigger pond way back when, when that was
I think
terrifying to me.
I think the first time we met in person was in the Coke Door Bar at the Drake Hotel in Chicago, and that would have been in 2012. So it's been a long time.
A long time. Yes.
Yeah.
Long time. Yeah. Come a long way, baby, in that time period.
You have. So can I tell your listeners your nickname within our community?
Sure. You bet.
The badass warrior tax princess.
Yes. And I have not heard anybody call me that in quite a while. So
Mhm. Well,
good memories on those.
you need the reminder. You need
I
the
do.
reminder.
Yeah.
You deserve the reminder. And not just a tax princess, but a business advisor. You have
Right.
gone above and beyond being a tax advisor to becoming a full service business advisor and counselor. And the work you do is unique. The market that you have targeted is a terrific market. A lot of accountants think, oh, I got to go after doctors. I got to go after dentists. I got to go after lawyers. Well, there are wonderful home services businesses in every city in America that are quietly, discreetly minting generational wealth.
They are.
It's a great market of great people. They don't put on airs. They don't lord over you with an attitude. They sense a problem, they feel a pain, and they discover that you can help them solve that problem and ease that pain. And together you move forward.
Thank you so much, Ed, for joining us on this episode of our Profitable Home Services podcast. Where could the listeners find out more about you if they wanted to dig in a little deeper to some more tax planning?
Well, if they want to go to Edward A. Lyon, EdwardALyon.com, they'll find me there. Frankly, they're not going to find anything from me that they can't find from you. So that's a second choice only if something terrible happens and we read about a fire in Rathdrum, Idaho, or wherever it is in the country that you are traveling to do your work. So yeah, visit Edward A. Lyon, but understand that particularly on the profit leak side, you're doing work that I've never done. It's the same concept of more than numbers in boxes. You're just doing it on the accounting side rather than on the tax side. But I would not ask anyone to do business with me before doing business with you.
Well, thank you very much. I really appreciated getting to visit with you and catching up on what's been going on in your life and in the world of tax planning. And we will catch up again pretty soon.
Terrific. It's been my pleasure. Thank you.
Thanks, Ed.